Welcome to Illuminati Silver. We tell the truth about silver. Today we're diving into some big expectations surrounding two major central banks, the Federal Reserve and the Bank of England, as they gear up to announce potential interest rate cuts. If these cuts go through, and we're expecting them to, they could significantly influence both equities and precious metals markets. Let's break down what this means for you as an investor. Overview of central bank rate cuts. Let's start with what's expected. Analysts are anticipating that the Federal Reserve might reduce its Fed funds rate from 4.75 to 5% down to 4.5 to 4.75%, a 25 basis point cut. This will continue the shift in US monetary policy, aiming to address economic uncertainties and support growth, and allowing for reduction in the rate of inflation. The Bank of England, on the other hand, is forecasted to lower its rate from 5% to 4.75%. With inflation in the UK and US cooling, central banks may see this as an opportunity to ease borrowing costs slightly without reigniting inflationary pressures. Election aftermath, strengthened dollar, and precious metals dip. It's also crucial to consider the context of these moves. Recently, former President Trump's victory in the US election boosted the US dollar's value, as market sentiment led towards a more business-friendly environment. A strengthened dollar, however, has led to a noticeable dip in gold and silver prices, as these precious metals tend to have an inverse relationship with the dollar. With the dollar stronger, both gold and silver have taken a hit. Investors often move away from metals in favor of the dollar during times of economic optimism or political stability, as they see less need for the safe haven assets. But with rate cuts expected soon, we're left wondering, could this upcoming decision impact the dollar and precious metals in a way that shifts this trend? Interest rate cuts by the Fed and Bank of England could lead to several potential outcomes. First, let's look at how these moves might impact equities. Generally, lower interest rates make borrowing cheaper, which can encourage business investments and consumer spending. This is often bullish for stock markets, as companies may see higher earnings growth with lower borrowing costs. However, with equities at elevated levels, some analysts worry that rate cuts might signal deeper concerns about the economy's strength. Investors could be cautious, wondering if this marks the beginning of a softer economic period or whether inflation may flare up again. For precious metals, though, this rate reduction could have an opposite effect. If these cuts reduce the appeal of holding dollars, we could see a shift back into assets like gold and silver. Lower rates could make the dollar less attractive on the global stage, as it becomes less rewarding for foreign investors. A weaker dollar can make gold and silver more appealing and more affordable for buyers in other currencies, which often pushes their prices higher. Market psychology and investor reactions. Let's now think about investor psychology. Markets often react based on expectations, and while the central banks haven't made their moves yet, but will in a few hours' time, anticipation itself can influence market prices. In the short term, investors are positioning themselves based on what they think will happen. Many are asking, could a rate cut weaken the dollar enough to trigger a comeback in precious metals? Additionally, these expected rate cuts come at a time when inflation, although cooler than last year, is still a topic of concern. Lower rates could risk reigniting inflation worries, and when inflation expectations rise, gold and silver often gain in appeal. Why? Because precious metals are traditionally seen as hedges against inflation, preserving value when currency purchasing power drops. The dollar and global markets. A rate cut by the Fed would have ripple effects beyond the US borders. Lower Fed funds rate could make the dollar less appealing compared to other currencies, with a less attractive dollar, global investors might look to diversify into other assets, including precious metals. This decision also plays into the global dynamics of precious metals demand. For example, central banks around the world, including those in emerging markets, have been increasing their gold reserves as a hedge against currency volatility and geopolitical risk. If the dollar does lose some strength post-cut, this might encourage even more central bank buying of gold, which in turn would push prices up. Short-term outlook for equities and precious metals. In the immediate aftermath of these cuts, we may see equities continue to rally if investors believe the central banks are making supportive moves for the economy. But it's a delicate balance. If markets interpret these cuts as a signal of potential economic slowing, investor sentiment could shift. In that scenario, precious metals might find renewed interest as a defensive play. For gold and silver, a return to higher prices would hinge on the dollar's response. If we see a weaker dollar after these anticipated rate cuts, precious metals could see upward momentum. Keep in mind that precious metals markets can be very sensitive to even minor shifts in currency values, and given the recent dip, they may be positioned for a rebound if conditions change. Long-term considerations for investors. For long-term investors, these anticipated rate cuts also raise important questions. Will lower rates support sustained economic growth, or are they merely delaying more difficult economic adjustments? And if inflation reaccelerates due to these policies, precious metals may become more attractive as longer-term assets. Gold and silver aren't merely safe havens in turbulent times. They're also potential stores of value when inflation erodes purchasing power. Many investors see rate cuts as an opportunity to accumulate these assets, especially when prices have dipped as they have recently. To wrap up, let's summarize what we're watching for. If the Fed and Bank of England proceed with these anticipated cuts, we could see a mix of outcomes across the markets. Equities might benefit, at least initially. But if inflation fears resurface, we might see a pivot back to precious metals. So what should investors consider? It's all about balancing risk and opportunity. With the possibility of a weaker dollar, rising inflation, and renewed interest in precious metals, this could be an ideal moment for investors to diversify their portfolios and stay attuned to how central bank policies are shaping the economic landscape. Thank you for watching. Please don't forget to like, subscribe, and share your thoughts on today's expected rate cuts. How do you think they'll impact equities and precious metals? Leave a comment below. We'd love to hear your perspective. We would also appreciate it if you would pop on over to our sister channel, Finances Do Matter, and subscribe there. We place links in the description box and comment section below. In addition, in the past 2 weeks, we've produced numerous videos on gold and silver, highlighting which are perhaps the better investments for your portfolio. Again, we've placed links below. Thank you. We look forward to seeing you soon.